What's up guys, Steven Ducks here. Today's video we're going to talk about multi-day runners that happened in the past week. There's so many runners that have been happening for the last couple weeks. BNGO, VEVE, VTVT, BIMI. So sorry I pushed back the Statistics 101 for you guys since I get a lot of requests for that. So we're going to go over specific patterns and specific how does the buyer and seller think when the stock gets into a critical point. So the first ticker we're going to talk about is SES. This thing went from almost $1 to $30. And the first day where all the squeeze started, which is at right around this point. So when you see when the stock tends to crack multiple day lows, and you saw it right around 10 a.m., it cracked through this area, but it didn't really break and slowly grinding up and cracked again. So the stock already shows you where the top is, and when the stock decides to break its top, it's time for you to cover your short. When you are shorting, especially SES on the first green day, and for the past couple months, we had so many tickers that didn't really break through the day highs and only end up on the first green day and faded all day. So a lot of short sellers gets really aggressive and start shorting SES since it's the first play we haven't had for a while. When you see a boring market for a while, there's always short sellers getting really hungry for shares to short. When they get shares to short, they want to use it. When they want to use it, they get super aggressive because they haven't get a play for a long time. And especially on SES, when the stock decided to crack this $3 area, it tempted and squeezed back up to the day high of around 358. Around this point, I really wanted to go long, but I didn't because afternoon perk, it tends to fail most of the time. A lot of people went long, congrats. And if you went long on SES on the first green day, you can sail up into the morning spike. That won't really hold up all the way to $26. So this is the only way you can trade it. One of the long patterns that really works is you haven't seen a play for a long time, especially for about 2 months or 3 months. Then there's one play popped up. Everybody has eyes onto it. Everybody has eyes on it, and the stock is trading 20 million, 30 million shares, super crowded. Because when the stock tends to trade a lot of shares, it means it's taking out of the supply. It means the stock has a really high demand. If the stock has a really high demand, really low supply, the stock tends to spike. Also, when there's crowded short sellers, the spike tends to be even harder. So especially on SES, went from 3 to almost 9 in the after hour. Now coming to the next day, SES, it faded in the morning and hit this support after our pre-market support. Now, just in case, if you guys think that after our pre-market support are the real support level, the answer is wrong. It's because never try to use pre-market after our support. So in this case, stock shows you where the support is and wait until the stock tempted to break its own high first. So in this case, the only long point you can do is when the stock shows you the dip, then buy probably long into this consolidation area when the stock tends to break through around 10 a.m. And after that, you can ride it through it. For me, I'm not really a long person, so I just set it through for the entire day into the next day. Then when you see that there's really low pre-market volume, it means that stock's unlikely to trade that many shares, which means the stock is likely to drop. So the stock opened around 16. Now, when you want to short into this type of ticker, you want to look for any type of hardcore resistance. And in this case, the stock didn't really consolidate for that long, since starting from 1 p.m. to 3 p.m., that's the only consolidation you have. And the closest consolidation you have is $20. So I can't really short at 16 because there's not any strength, no push against that $20. If I short around 16, I'm risking $20, which means I'm risking about $4 per share. With that bigger risk range, I can't really take any positions. So on SES, I just set alone. I focused on BIMI sympathy play. You can see SES and BIMI are the same sector. They're all energy sectors. Now BIMI is a different situation compared to SES because since SES ran for multiple days, BIMI only ran for 1 day. And you know BIMI is following the SES action. When you see SES is about to drop, which means BIMI is going to follow. And also, for BIMI, the risk management part, it will be so much better compared to SES. And when you see there's a pre-market consolidation around $12, and the stock, especially on SCS, start losing momentum, that it will show you that SCS is likely to lose momentum. So when the stock goes red, especially on these type of multi-day runners, going red for a ticker is pretty deadly for the stock. So when the stock tempted to lose that $9 area, that's where you should size into and cover back into the $6 area. What was that sound? It's your phone. So personally, on the live trade, I shorted around $12-ish on the webinar, and I added in this breakdown. So I covered $5 area. I made about $50,000. So in this specific tickers, I waited for so many days, just wait for the backside. I'm not really good at long side, especially on BIMI. It's trading really thin volume, so you never know it's going to get squeezed. You never know it's going to lose its momentum at any type of volume, because when the stock is trading really low volume, if you take a look of the 1 minute chart, it's trading about 50K, 100K, 20K, 200K. That's considering pretty low for the stock running up 500%. So in this case, I would highly suggest avoid on the long side. On short side, it was pretty predictable. So that's for SCS and BIMI. So after SCS and BIMI, the stock market is not done yet. There's a lot of stock running back and forth, and after that we followed with VIVE. Now this ticker, it did have some type of resistance before, right around October 1st, but it's really, really thin. So in this case, you can only be able to trade as a gap up short. Now, in most cases, if the market is not that hot, and when the stock loses 75% of its entire gain, the stock has a really low chance to come back all the way from the bottom and to the day high. Especially when they come back, it's likely an add or a potential short. So VIVE, I didn't get shares to short, but if I could get shares to short, I will probably aim around $9 area and cover by the end of the day. It's still dropping after hours, so that could be considered as 50% gain. BNGO, this ticker is extremely weird. So from the statistics I'm tracking, when the stock tends to form its resistance in the pre-market, the chance of the stock coming back to the pre-market high is really, really low, since the stock went from 40 cents to 3, then 3 to 1, then 1 to 5. So that's a huge volatility back and forth. So not really recommended trading, especially when the stock keeps halting for 50% times of the day. Never try to trade when the stock is in a massive halt for so long. So that's for BNGO. Now there's a lot of tickers that I haven't covered yet. It's because that the stock didn't really trade enough volume and they don't really meet any technical analysis. So when you are in really hot market, I would really suggest that to be extremely careful on the long side, on the short side. It's because stock can drop from 3 to 1 and 1 to 5. And each side moves up and down about 75%. From the day high, or moves about 200% from the day low. So if you cannot control your risk, your account will be easily blown up, especially on SCS. People lost a lot of money. They're trying to short at the front side, and the stock went from 1 to 26, and people are losing hundreds of percent. On the other side, if you waited for SCS backside, you can short around 16 and cover around 9, 7, 8. And when you are being patient, you can make about other 50%, 75%. In the hot market, we are seeing there's 10, 20 top percent gainers on the left side, and each of them is trading 10 million, 20 million volume. You know the hot market is already here. And for what you need to do is you just need to wait. Wait for the right opportunity to come. It's because if you are being too rushed, you will be the guy that shorted SCS at the front side and lose their entire account. Whoops. So that's my analysis for all the runners that happened for the last week. Make sure to click the like button for the video. Also leave a comment below if you have any questions about any technical analysis that I did for all the runners. At last, be patient, wait for the right setup, and don't get FOMO, because there's always opportunities coming to the next day. So that'll be the end of this video. Thank you very much, and I will see you guys next time.